All right, so today we just want to look at the JPY pairs and how we can be able to trade them properly. So this is USD JPY, and these are the rest of the JPY pairs that have given us trading opportunities for this week. So we want to see how we can best take advantage of them. So let me start with GBP JPY, and then I will be able to analyze the rest and see how we can actually be able to take trades. So on GBP JPY, the first thing you always need to do is to come to a higher time frame. In that case, let's just start from monthly time frame. And what do we look for in our monthly time frame or higher time frames? We look for zones, either demand areas, supply areas, resistance, and price difference areas. These are the three things we look at. So if you look at GBP JPY on the monthly time frame, if you look on the left here, so let me just enlarge the screen. If you look on the left here, you realize that the whole of this candle here was our supply area. Because if you look at this was a strong bearish candle that broke below this low, and also these are the lows here. So the whole of this was our supply on these ones here. So that was our supply area. And then coming into this here, so when the market returned into this supply area, it was able to reverse. And then on reversing, it gave us another supply on the monthly also here. This is potential place for a reversal in case price pushes there. And then when we look down here, of course, you realize this is where structure was broken. So the market broke up here and then went. So meaning if the market reverses into this area, we will actually have another reaction. So once you have that, here we don't have anything much in this area here. We just have these other lows here. Just like that. But then we have a monthly wick here. So if you see this wick here, wicks tend to be filled. So there's a possibility that this wick would be filled eventually. So once you have that, we don't have any more information. This monthly candle has not yet closed. We still have about 4 hours for the closure of the monthly candle. Okay. Remember today is 30th. So since we have this, we can now come to the weekly time frame. The weekly candle has just closed. So on the weekly candle, if you look at here, now I just want to show you something. If you look at the market in this area, this is a strong impulsive to the downside, and then we have a bigger correction, and then possibly for another move, impulse to the downside. So the move I'm trying to say is that we have a strong impulse. When the market comes down, the strong bearish, it tends to correct a little bit, and then before it can also head down. So this is the kind of move. And because of this move, we still think the market is bearish, especially on the bigger time frames. But then we need to study this price difference area here. So this is the price difference. So we also mark it like that. So this area here, just need to mark it like that. Okay, that is where the next resistance will be formed. Because if you look at this is a strong break, so meaning this will be another price difference, and then a strong break, another one, and then this one, a strong break candle. So once we have this, then we can focus on this other candle here. We have also another price difference area here. Okay, so we are trading in between this one on a bigger correction, impulse correction. Then we can come to a smaller time frame, which will be the daily. So on the daily time frame, you can clearly tell we are trading here. And then actually, if you just zoom this up here, that is your supply area, which corresponds to the monthly supply. So you can just get rid of that because this is the same thing. And then you see here, when the market actually reached into this area, tapped it in, and then able to be bearish and come down. But then it broke these are the resistance. This was the resistance. The market broke it and then closed below this resistance with a strong bearish candle, giving us another price difference area here. So once we have that, we can then come to our 4-hourly time frame. And then on the 4-hourly time frame, remember we had this is a strong impulse, bigger correction, and now we have an H4 impulse here. So with this impulse, and then we have a price difference here, or what you would call your supply area, the whole of this area. So now what we want to see for us to be able to trade, is if we now come to a lower time frame, this is the area in which we shall begin to look for trading opportunities. Okay, so the same way I've analyzed this here. So what trading opportunities or patterns will actually make me to enter a trade? I usually focus on one pattern, and that is the double top, triple top, Okay, so one price reaches my zone, the next thing I would want to see is price forming a new low. And then from this new low, if the market heads up and then doesn't break this high to give me something like that, strong break, a double top, then that is when I'm actually interested in trading. So that's when I will begin to place some trades, especially on the lower time frame. So this is the only pattern I'm actually looking for in this trade here. GBP, JPY. So is the amount this week I'm majorly going to focus on JPY pairs because they have given us that impulsive move and we think they are correcting to impulse to the downside. So this same pattern here is what I will look for in the rest of the GBP, JPY pairs. So if you understood exactly how I've analyzed GBP, JPY, you can actually use that same analysis for these are the rest of pairs. Start from top, come all the way to the down time frame. And then this is, of course, where we are looking for the double top formation for us to be able to trade. The same thing with these other GBP, JPY. So now, what you need to know is that one of them will have to give us a double top, one or two of them. And that usually happens all the time. So the ones which will actually give me a double top are the ones I will be able to trade. They are the ones I will be able to trade. So the rest which don't give me anything, I will not actually be able to trade. Whatever different pattern the rest give me, I will not. So I will just look for what I exactly want, what I have envisioned, and then what I have backtested and what works for me. A double top inside a zone, that is what works for me. So throughout the week, that is the thing I will just be looking out and I will just be watching the market. I don't want to jump in until I see my pattern. Once I see it, then I can be able to jump in. So meaning all I have to do is set my alarm. I set my alarm. So, and then I wait for trades around this region here. Okay, so this is an alert. You come here, you right click, then you come to the alert, and then you can set it whether to be crossing or something like that. You set it and then you wait. Once price is able to reach into these zones here, the next thing is we wait for that pattern, and then that is how we are going to be able to trade. So I will just be moving through, checking for one of them. So out of these 1, 2, 3, 4, 5, 6, and 7 APY pairs, one of them or two will be able to give us the pattern we are looking for. And that is what we do in trading. So you scroll and then wait for the pattern on all of these other pairs here. So that is just what I wanted you to do. So then now you don't get to choose all of them depending on your risk appetite. So once one or two of them have given you the entry signal, then you can begin to think of position sizing. You either take one or you risk maximum of 2% on that. So that is how we want to be able to trade JPYs this week. So let's just continue to watch them, then we focus.